All right. What a weekend. Ugh. That's what we got. We got this mania bubbling. And what is the mania in? Silver. Of course, my favorite asset. Um, you know, People are saying there's not enough silver in the, APMEX, whatever. A bunch of different brokers are being basically, run dry of their supply of silver. And I mean, first of all, this should, put a little thought in your mind about what the safety of silver provides. Because they say the Wall Street bet community is the ones going after silver. I totally believe that there's definitely a lot of those people, and the publicity that they have has caused other people to, go get silver. But they're not just going to get silver just because it's the most short squeezed or the most rigged market and therefore could benefit the most from a squeeze. They're going after it because, well, it's a real asset. GameStop is nothing compared to silver as an asset, and the kind of power that, although if left totally unhinged, GameStop certainly could easily crash the entire financial system. I mean, that's what they don't want you to know, how easy it is to crash the system. I mean, it's totally controlled from the top bottom. That's why they needed to, or not even needed to, but showed you kind of their power by limiting buys or whatever. But even in the case where GameStop takes out one hedge fund and then the contagion spreads, they would just mop that up. Look at long-term capital management, the crash that was before the 2001 bubble, I think 98 or 99. Take a look at long-term capital management and what they did with that, because that's the kind of scenario that we're going to be moving into now, because you have to stop the contagion at a certain point before. Well, if it expands like this, you got to stop it somewhere around here, and so that's what they've done and what they're going to do with GameStop moving forward. But with silver, it's definitely, in my mind, a bigger problem to deal with if a short squeeze did get executed, or if the real price discovery was allowed to happen with silver and gold more specifically, really, because gold's usually the benchmark. I mean, silver could go up and people don't really necessarily know why, because they don't always associate silver with money the same way gold is traditionally associated with money. But the people on Wall Street bets community and whoever else is buying this physical silver, it's probably a lot of rich people, but they understand, some of them, the value of physical silver, right? Because what's going to happen eventually when this market starts correcting to fair value is what is happening now. You will not be able to acquire physical silver. That period. The market will be dry no matter what happens, and that's why the physical market is so important in silver, because that's what will filter through. I mean, if theoretically people do demand enough delivery of silver, the kind of measures that would have to be taken are much more drastic than the measures that have been taken in GameStop and will continue to be taken in GameStop in order to suppress the action or the effects that short squeeze could have possibly had. I don't know, honestly, how big the silver market is, but a lot of people make money selling silver into the market, and we know that I know from my friend Greg that JP Morgan, and I mean, you can just look it up. JP Morgan pays fines for this, but JP Morgan's the biggest rigger of these assets. And so what did I start off this video by saying? I said there's a mania going on right now. Everybody is going crazy over this silver situation. Let's take a step back a little bit. Let's calm down and say, where's the power? How's it going to be used? And how aware are people of that power? And how would they react if they really saw it? And we want to get to that end reaction. We want people to wake up. But at the end of the day, right now, the power in the game is still in control of JP Morgan from my eyes. Now, the market futures are going to open in an hour and a half here for me. I don't know what silver will open at. Maybe it'll be up 10-20%. I own physical silver. I'll be happy, if that happens, but that's not necessarily what I would expect. I would expect the rigging to continue. I remember back in March when COVID hit, silver was at like $14 or $14, $18, depending on where you bought it online, what you were buying. So you could get silver for physical for that price, but it was still sold out at certain places. You still couldn't get it. So in my mind, it would be possible that there would be a complete shortage of physical silver, but they would be able to still suppress the price. And because, again, people aren't at that end game where they really understand the full mechanism and how rigged this market is, it won't do anything unless people really wake up. And so I'm really glad people are waking up, but that's my opinion on the silver thing. Keep acquiring physical if you can. I mean, that's what you really want to own. I love the mining stocks too. I've been in them. I've made money off of them, but I trade them. I don't own them. So that's that. And let's get into a little of the rest of the market here. We got a big week of economic data coming out. We have non-farm payrolls, manufacturing, jobless claims, trade, and I'm sure there's people speaking or whatever, But what is going to drive this market this week? Well, we're definitely in a correction phase right now. And like I said in my other videos, I think the fear in the market could play out a little bit. This whole situation about GameStop and now silver that we've been talking about. So I do think that has the potential to keep pressuring the market in this coming week, especially early in the week. However, I think there's one tweet that people need to see, and that's a tweet from Janet Yellen today. So let me read this. It's not the exact right. I just wrote it down. The president is right. The benefits of acting now and acting big will far outweigh the costs in the long run. Far outweigh the costs. So let's decipher that. The president is right. The benefits of expanding debt more than we've ever expanded now will gain us more power and push the market up more than it ever has before. That's what she tweeted. I know that I paraphrased a little bit in that second reading, but that's really what she's tweeting. And this is what's going to continue. I mean, Janet Yellen fed Powell. I don't know if they'll replace Powell. I don't think so. I'm assuming that whatever. And Biden are going to inflate the debt to levels you've never seen before. And may not be able to fathom. I can fathom it, but I still don't even know where they're going to go. And so that force is ultimately what's playing this trend and why the market's going to keep going up, barring some sort of black swan event coming in pretty soon here. So back to the economic data. I named those economic data points we're going to have out. Look for fake economic data and look for better than expected but bad economic data. That's how they're going to play it. They're going to say, oh, we expected the economic data to be this bad, but it was really this bad. Even though it was bad, it's only this bad. Market will react positively. Or the worse the economic news get, the more the market goes up, because that means that the debt mechanism gets to continue and gets expanded by, as Janet Yellen said, the benefits of acting now. We need to act now to save the economy. Well, obviously, you're not allowed to know that the economy doesn't need any more debt. It already has more than it's ever seen in the history of mankind. And look where we are. We have terrible levels of, say, homelessness, say, the jobless rate for low-income workers specifically, housing for these people. I mean, we all know that people are in trouble in America right now in a lot of different ways. Mental health. I mean, we could go on. So debt is not what we need right now. And, I'm sure some of you out there are going to say, well, what if we just had the correct allocation of debt? What if the debt was expanded in the way that I wanted to? Okay, I have a little sympathy for that position because I think I could do a better job with the debt too, right? I could allocate it better. I could say fuck off to the Wall Street people that get debt and give it to the people, whatever. I want to crash the dollar just as much as anybody else. But the best scenario is not to expand the debt. That's a hard pill to swallow, and that's totally contrary to any economic theory that you've been taught in high school, college, or beyond. Okay, chances are. So you need to find the economic theory for yourself, reading books. I'll just give you one from my bookshelf right now. America's Great Depression by Murray Rothbard. That'll solve all your problems with economics. It's a long read, but that'll solve all your problems. So it's going to be a turbulent week. Look for volatility in this market. Uncertainty, but certainly the fundamental drivers of the market are going to continue, and that's what's going to push the market up. If I had to guess, we could see a sell-off maybe early in the week. Maybe I'd open up a long position midweek, and maybe we'd rally into the end of the week, or there would be one day where we rally later this week. I don't know, but I'm certainly going to be playing the trend here. Right now, I'm totally out of the market, still looking for somewhere to open up a new brokerage. Cryptos are doing, well, Ripple's doing great, which I own a lot of, so happy there. But Bitcoin's still at 32,000, so that's looking good. It's going higher. I mean, this is the game, people. So get on it. I'll talk to you tomorrow with some more updates, and I think tomorrow we'll have a much better view of where the market's going to end the rest of the week at, and be watching futures when they open at 6, see what silver does and see what they do to that. All right. Talk to you later. Have a good one.